Hey everybody, welcome back to another webinar. So basically what we're going to be doing today, you guys already know how this goes, right? We're going to be going over GJ first. So let's look at GJ on the weekly time frame since we are coming like towards the end of the week. So at the beginning of the week, obviously GJ was trading near the highs at about almost 170 flat, and we've actually seen a rejection. And if we start paying attention to GJ on this weekly time frame, we start paying attention to the lows of each previous week, what we could slowly see is somewhat of a transition where essentially we have a high, a lower low compared to the following or the previous week. And then the following week, we have a lower low compared to that week, and then we have a lower high compared to the previous week, which is an obvious indication that price is going down and we're making lower lows and lower highs. Ultimately, this entire range is an area of resistance, which price currently, as of right now, is trading under. And one thing that I did say, I believe, when I was breaking down GJ on this specific week is that we could definitely see a pullback back into this range where we could then look to sell price back down. Now, going down into the daily time frame, what we have is a pretty much clear as day transition. It doesn't really take a rocket scientist to identify that this is a high, this is a low, this is a lower high, and this is a low. Now, with that being said, why I did say 165, 500 would have been great targets for shorts, essentially is simply because we're at support, right? So the last setup that we spoke about on GJ was basically a pullback into this 167 area, possibly even 167, 500, and then possibly, 167, 800. Anything above 168, I wouldn't have been interested in selling, which ultimately price did reject this entire range. And we did see the move that I was expecting back down into 165, 500. Now, right now, GJ is breaking above this minor area of structure, giving us some form of a pullback, but ultimately price is rejecting this level of support, which could be an indication that we could possibly see a pullback all the way back into this 167 area, where ultimately then I would continue to look to sell. Again, remember, as long as price can maintain under our 167 resistance range, we're going to continue to look to potentially sell this area where we could see a retest and a rejection and a continued drop lower. If price does pull back all the way into this 167 range, then I will look to sell it simply back down into 165, 500. Now, one thing to keep in mind is that we could possibly see a rejection and a continued move to the downside from this area here as well, because GJ ultimately made new lows here, made a lower high here, made a lower low here. So right now, GJ is in a pullback, and we could potentially see this pullback kind of roll over from this point here and continue to go back down. Now, obviously, the safest targets, if you were to short anywhere, would be 165, 500, or at least the very lows of support, because we don't know if price is going to break that support. And you don't want to be in the trade when it significantly starts to pull back and completely go in the opposite direction from sells. That's why I say, target the next area that has the price highest probability of actually getting hit. Now, if you were to look to sell GJ, again, this would be a great area to look to sell GJ as long as price can kind of maintain under this entire zone here. Now, if price were to break above, then obviously I would just simply wait for 167. But ultimately, you guys got to keep in mind the lower high point is here. So you can continue to look to sell as long as price does not break above this range here, right? Now, that's what I'm going to be pretty much looking for with GJ. Now, if GJ does break 165, 500, obviously we can come down into the next structure point, which is anywhere between, let's call it 163, 500 to 162, 163 flat. That is going to be the next area where I will look GJ to actually go down from. And from this point to this point is about 200 pips. So it's a pretty big move. If you guys want to play a little bit more safe and you're maybe uncertain in the current direction of the market, then simply I would wait for a break and see if GJ can actually pull back into our previous support zone, wait for that retest, and then look for price to continue to go short back down into our next structure point, which is roughly around there. That's kind of what I would wait for. I personally just wouldn't take buys overall just because we're seeing a lot of rejection to the upside. And again, price right now in the lower time frame, being the 4-hour time frame, is making lower lows and lower highs along with this hourly structure. So I really wouldn't look to take buys. I would just continue to look to maintain my sell bias until really proven otherwise, which realistically, I would stop looking for sells after a break of this structure zone right here being 167, 100. Let's call it. Now, with gold. So I believe we had CPI news. Someone correct me. I'm pretty sure we had CPI news. I was on the markets today. Did we?
We
Yeah.
did.
Yeah. So obviously with CPI, we had a huge, huge move up in the markets, not just on gold, but also on the index funds as well, from what I saw last time. And at this point in time, I wasn't very comfortable looking for sells or looking for buys along this area here. And price with CPI completely blew through the targets of 1730, which ultimately, if you would have taken buys there, then essentially the setup would have been to wait for the break and retest, which you did get some form of a break and retest setup right here. But I don't know if I personally would have been comfortable taking a break and retest setup along this area. I'd kind of have to maybe try and zoom out a little bit and see what it looks like over here. I'm not sure what that is, right? So we're going to have to wait and see what price actually does over the next few hours, for the next few days, even potentially, right? You could have potentially taken advantage of that setup, of that break and retest setup on the lower time frames, but it definitely would have been a lot higher risk setup. We did have a lot of bullish movement. With that being said, I would kind of at this point in time maintain myself on this 4-hour time frame and see where price actually goes. There's a few areas we can pay attention for price to actually go to, which the first area is going to be roughly around this range right here, where if we kind of just zoom in and look at previous structure, what we have essentially is resistance along this range, indecision here, and then we have support after price breaks above this area here. So this could be a pretty good area to look to possibly take a position from here. I would like to see a better rejection off of this area, right? Wait for a little bit of a steeper pullback into this area. Wait and see if this area holds its support. And you could possibly look to just simply buy it up from this point to this point, which is about 100 pips. Now, if price does break that point, going back to the 4-hour time frame, I would possibly look for price to maybe come into this 1757 to about 1766, 1765 range. So I'm going to definitely continue to expect the gold to continue to go bullish. I mean, it's very clear that we had pretty much buyers almost day after day after day coming to the market. We've had a bullish impulse, minor pullback, bullish impulse, minor pullback, huge impulse. So we could just have a minor pullback, maybe some consolidation before another move up. But definitely this would be, an area to pay attention to here with gold. Now with US 30, obviously we had a huge move up with CPI, and the next expected target range would be 34,050. That's kind of where I would expect US 30 to actually go down to. US 30 could have definitely taken advantage of this setup right here. I mean, it's kind of clear as day. We had the break above, pullback, retest. I believe this was in the middle of the day, maybe around 1, 2 o'clock, that you could have potentially taken advantage of this move. But I mean, it doesn't kind of get cleaner than this. You had a nice clean break, retest, rejections here, and then another retest and a rejection over here. And ultimately just taking a break and retest setup, you could have very easily made money by just holding your position. I mean, even after you had price start to reject this area over here and then over here yet again, I mean, it was just bullish, 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 bullish. So definitely a lot of bullish momentum, and I'm going to continue to maintain that kind of bullish bias. Now, in terms of where we could possibly see US 30 pull back to before looking to continue to buy, it's going to be very difficult to say, because I really don't know if US 30 will pull all the way back down into these lows, although this would obviously be the best setup to kind of wait for here, waiting for US 30 to come back down into our previous highs, where we could look for price to hold as support and then look to buy back up into our current highs, being this area here, or possibly even future highs at 34,050. This would obviously be the best setup. I don't know if it's going to happen. I mean, we could use a fib tracing tool. That's about a 38.20% pullback. I mean, we're going to have to wait and see what price looks like during the New York session, but that's kind of what I would wait for as of right now. I mean, other than that, I would just continue to look to buy US 30 coming into 34,050, where I'm definitely going to be anticipating selling pressure at this range. I mean, I'm actually going to adjust this, be a little bit around this area here, right? I'm definitely going to be expecting selling pressure to come in around this area, pretty much this entire zone here. We can definitely expect sellers to come into the market or at least there be some form of resistance here. Obviously, if price does break above this point, you guys would already know if we break above this area, we're more likely to come back up into this range where these highs all the way up here. So we're just gonna have to wait and see. It's just gonna be a patience game. Honestly, at this point in time, I would be very selective with the type of positions that you do take on US 30 because these aren't typically the type of trades that are the highest probability trades where you're just taking a setup just to take a setup. Obviously, I would like to wait for a steeper pullback. Now, if by the time the market opens up and maybe we're trading down here at these lows or these previous highs, you definitely can take buys off of these previous highs. I wouldn't say it's a bad trade, but I would definitely look to take buys off of these previous highs. And I would definitely prefer buying off of these highs rather than just kind of looking to take a position anywhere in between. And that's really when quality versus quantity of trades comes into play. It's a lot better for you to maintain your current account balance and your current P&L and not incur an extra loss by just taking a random trade kind of out of nowhere, especially a trade that doesn't fall into your trading plan. Now let's check the NASDAQ. So NAS, kind of the same thing. We've actually pulled back into this resistance range up here. Again, I'm going to call it a range because everything is a specific zone. It's not a specific price point. Now, me personally, the way this price action is actually playing out as of right now, I would continue to actually expect buys, although we're still at resistance, just simply because of the way this candlestick closed. I mean, we have very little wick to the downside and we have no wick to the upside, meaning that there was a lot of bullish momentum and that buying pressure and buying volume overall from that trading day was very strong. So with that being said, more than likely, a lot of people are going to be looking to buy. A lot of people are probably anticipating for the markets to recover. So I would continue to actually look to buy with our previous day's price action information. Now, with information on the daily time frame, basing our trade like, hey, we could definitely look to buy off of this level, you just simply have to ask yourself, okay, where could we possibly pull back to actually look to buy? Well, basing our current information off of the daily time frame, we have this major range of support being down here. Call it a median, because this is a rejection of this area. This is also a rejection of this area. This is also a rejection of this kind of general zone right here. You still have to be very cautious about looking to buy the NASDAQ. Realistically, the way I would look at this is I have two options, right? We can wait for a pullback back down into the support zone. And obviously, if this area holds, we could then look to buy it up back into the highs up here because we don't know if price breaks that area, right? Or if you're someone that's looking to buy and you're really waiting for like a safe buy, I would wait for an absolute break of all of the highs kind of being around this range right here, 11,650. Wait for the retest and then look to buy off of the retest and a rejection. Those are the only two setups that I would wait for in NAS because I wouldn't be too comfortable looking for a sell opportunity when we had this massive move to the upside. I mean, price went all the way from 10,700 to 11,600. That's ridiculous. That's a huge move, right? That's what I would wait for on the NASDAQ. Other than that, that's pretty much going to summarize the breakdown. Now, does anybody have any questions or anything that would like me to go over?
Yeah, I have a question. So if the weekly trend is bearish, but the daily and the 4-hour is bullish, you would look for buys instead of sells?
Once I start seeing price give me reasons to start looking for buys and price tells me that we could potentially buy, I would continue to look to buy. Again, like it's all about what side has the highest probability. And as of right now, I mean, just look at the weekly time frame, right? If we look at the NASDAQ, essentially what we have is price completely breaking over last week's highs, which essentially showing what? Higher highs, right? So if price is telling me higher highs on the weekly time frame with this candlestick analysis, and on the lower time frames, we're starting to have some form of a transition, I would continue to look to buy because the probability for price to go long is a lot higher than price going short, although price still has a probability of going short. Remember, everything is in percentage and probabilities. Price may have a 70% of going up tomorrow, but it still has that 30% chance it could go down. So you can ask yourself, well, if it goes down, how can I take advantage of that move? And ultimately, that's going to be up to you as a trader. Me personally, if I was looking for sells, I would like to see price break under this area first. Give me a lower high, lower low, and then wait for a break and retest of that lower low to then look for price to continue to go down.
Okay. Can you go to AU real quick? And to the weekly time frame? You see how around that area, it's about to reach that weekly resistance, but the daily is telling me, and the daily in the 4 hours is telling me to buy, and I was just confused because it looks like by Monday, by next week, it'll reach that area, and I wasn't sure if to take sells.
I mean, yeah, it could. You just have to wait and see what price does when it gets to this area. If it holds, then you look for sells. But as of right now, the setup is obviously buy. Why? We just broke, or we AUD USD just broke above this major price point, this area of resistance that it's been rejecting since literally the beginning of October. So the best thing for you to do at this point in time is wait and see if price can give us a pullback into this area and establish that this area holds the support. And not just waiting for a pullback and a break and retest, but we're waiting to see if price can give us a pullback enough because it, one, gives us a discount, and then on top of that, it gives us a safe place to place our stop loss. Because at this point in time, if we buy right now, we place a stop under the current daily low, price can easily break that point but still go bullish, right? And it still has a high probability of going bullish even if it breaks the current daily low, right? Because the previous daily low is all the way down here. But if price comes back into this previous level of resistance and it holds its support and it's starting to reject, it's starting to go up, and you take a buy and you place your stops under that level, it has a high probability of going up from this point. And it gives us a safe place to put our stop loss because price could do this. It keep coming back down to this area and bouncing and bouncing and bouncing. And this essentially area where there's liquidity is protecting your stop loss order from getting hit. At that point in time, you could look to take profit at the current highs or at possible future highs. More importantly, though, you're waiting for a pullback in a safe area to look to place your stop loss, right? That's why we use stop loss orders, and we only trade at pullbacks where there's areas of supply and demand because it protects our stop loss. Think about that as literally a bulletproof vest. Think about it as a shield, whatever you want to think about it. It has an 80, 70, even a 65% chance of holding. Those odds for you to win that trade are a lot higher. I mean, they go back to a random example. You know, if you have a 75% chance of waiting for price to come back here and you have a 75% chance of price bouncing and going up from here, why would you take a trade that only has a 50% chance of winning? You know?
Yeah, okay. Thanks.
Raul,
Yeah.
are you trading tomorrow? Because it's like bank holiday.
No, I definitely would not trade a bank holiday.
All right.
Is it bank holiday tomorrow?
Yeah.
USD Veterans Day.
Yep.
Damn it. I was getting ready for a setup too.
I mean, if it's a U.S. bank holiday and it's a U.S. holiday, you could, for those of you guys that trade GJ, you could definitely still trade GJ on the London session. If you trade gold, you can definitely also trade gold during the London session. I just wouldn't anticipate there to be like a massive move, you know? But again, it comes down to like, you have your normal trading conditions, then you have external factors that are going to be affecting the market, such as a bank holiday. You know, where would you rather put money at risk when you have normal market conditions with normal volume, normal liquidity going through the markets, or when volume is a lot low, you could get stuck in consolidation or chop? You know, where would you want to put money at risk?
But do you know when you're looking at the news section, do you look at the orange folder or the red folder on Forex Factory?
I mean, to me, it doesn't matter if it's a bank holiday. I wouldn't even like take into consideration that it's a bank holiday. All right, it's not a working day.
No, but in general, like when you're looking for news.
You could definitely backtest it and see how previous news events affected the market. And I mean, the way I would approach it is, let's say with CPI, right? If the anticipated report was supposed to be, I don't know, 0.75 of a basis point, right? And it comes out to be a whole basis point, a whole percentage point. How did that affect this market that I'm trading? You go on the charts and you check, okay, well, we had a move down and then ultimately the day ended up bullish and we had a big spike up, right? Just giving you guys a random example, right? Or vice versa. And you see how those news events affected the market on that day. You can definitely build an edge towards the news event by backtesting it. Does that answer your question?
Yeah. Thanks so much.
Yeah.
Can we do that with CPI?
Was good?
Can we do that with CPI or no?
Yeah, of course.
Okay, thank you.
Yo, I've been watching like your past webinars, and what I can tell from like the 4-hour levels, which like intraday, you look for that 1 hour break and then like rejection on the 5 to 15 minute.
Basing it off of like the 4-hour levels, especially when you're trading like Forex, I would wait for like the retests and the rejections off of like an hour level. But
What do you think about indices?
indices, I pretty much almost do the same thing, except I do it off of an intraday level, which is more like an hour level. Then I'll go down to like a 15 or a 5 minute and take a trade off of there.
What do you think about like your more like big levels, like your daily levels on indices? Do you look for like a hour rejection and go down to a 5 to 15 minute level, or do you just straight go to the 50-minute time frame off a daily level?
When it comes down to the bigger levels, right, you got to allow there to be more time to play out. Like we can just go to NAS really quick, right? You could see the amount of consolidation we had around these areas. Like, for example, this is a 4 hour level, right? We had an initial 4 hour candlestick come up, pull up, and then another 4 hour candlestick try and break this area, but completely failed. You could definitely have taken advantage of this candlestick. I mean, especially when you're trading indices, like you don't need a huge move out of the market to make a lot of money. Like you could have easily banked off of this move, made ridiculous amounts of money off of this move, and essentially just looked to short every time it came to this area here. You could have done that, but like to see like a move like this takes a lot of time to play out from these major areas, because on the daily time frame, it's just a few candlesticks. But each one of these candlesticks is 24 hours. So imagine for price to essentially reject this area, really go bearish, it took not one, not two, but basically took 3 days for this to play out. And if you're looking for a move from this point to this point, like you really have no necessity being down on a 15-minute time frame, right? Versus if you're on a 5-minute time frame and you're kind of just like looking to like make a, I don't want to say a quick profit, but you're not looking for, you're not looking for like a massive move out of the market. Then, you know, if you're looking for a quick move from maybe like this point to this point, that's perfectly fine as well. You know, just know that on the daily time frame, you may see a lot more consolidation. So, or on a daily or 4 hour level, you may see a lot more consolidation along those ranges. So, you know, maybe use a smaller position size than what you would normally use, you know, versus on an intraday level. Like if we pay attention to an hour level, I'll give you the example of this area kind of right here. Price pulled back, and in the following hour, it gave you a retest and then a move down where you could have easily capitalized from this point to this point here, you know. But then again, you're not catching like a massive move. Essentially, like if you're on a 5-minute time frame, catching a good portion of this move from here to here maybe takes about an hour, right? But then again, it's not like a whole swing like you would anticipate it. So you got to keep in mind, like the smaller the time frames that you're trading, the smaller the moves you should be looking for in the market, you know, versus if you're trading like a 30-minute time frame, then essentially you could look for a lot bigger of a move, right? Versus like if you're trading like here, right? You could have easily caught a move from this point to this point, or possibly from this point to this point if you would have obviously had multiple targets, you know?
That was explained like fucking amazing. But I just got one question. Like I noticed like on the daily levels, to like long or short off of them, you want to have like a break of them maybe, or a rejection, like that first blue rejection on that red zone, like the one you were talking about, that one. Like
Yeah.
maybe get a rejection on the daily, then go to the next day, and then go to like a 5 or 15 minute, then like wait for rejection.
The way I would play this out. So if we look at like the price action with all of these major daily levels, there's multiple retests of these levels. Like this day, you could have easily said, okay, price is coming into the range. Let's see if we find a rejection. I'll take the first rejection. I see on a 15-minute time frame, essentially caught a move from maybe here to about here, right? The following day, the same game plan. Why? Because you rejected on the previous day. I was like, okay, well, let's wait and see if price will come up into this range, grab liquidity where I could then catch a move from here to here. Then things change a little bit because now price is trading back under this area right here. So then it's like, okay, well, we're no longer trading around this area of resistance. We're trading under this area of resistance. Let's see if the following day will pull back into this area, reject it, where I could then catch a move from maybe here to down here, new daily lows. Just giving you guys like the examples of things. Like literally, just look at price action and see how price action traded along these areas. That's all you have to do. Spend time with the markets, get to know the type of markets that you're actually trading. What happened over here? Price ended up coming down into this area of support, completely, I don't want to say completely rejected it, but it had a rejection. Next trading day opened up. What happened? Retest and they move away. Same exact thing. Price broke under, made new lows all the way down here. pulled all the way back, retested on this day, then retested yet again, where you then had a bigger move down. You could have easily capitalized off of a 15-minute time frame from here to even down here. Then the following day came all the way up, and you could have capitalized again off of the same level from here all the way to down here if you would have held throughout the entire day, right? But again, like, these are things that you're going to learn with time, especially like if you're someone that suffers from FOMO, it's going to be a lot harder for you to do. But you just want to be selective with your positions. Like, for example, same thing with this candlestick. Like, let's say we have the area of resistance, price just broke above here. Like, why do you think I'm saying wait for the retest and the rejection of this area to then look to buy? Because most likely price is going to come back down and sell, or buyers are going to want to hold these areas because sellers are going to try and push price down anyways. You also have to think about it as like, where is the majority of the buyers going to get into the market? They're not going to get into the market right now where price is at a high. They're going to get into the market when price is at a low and is down here, right? So you have to put it from that perspective as well.
So in a sense, like that example you just gave, you wouldn't necessarily care if like you wouldn't wait for another day to like reject it. You just like wait for the day to come down. If it's showing reject on like the 5, 15 minute, 30 minute, you would take that long off that yellow level without like the daily rejecting.
Yeah, for sure. Because once I see the following day has broken above or under, I'm immediately going to anticipate the next day to come down or come up and test that area before continuing to reject. And I'll give you the same example over here. You could have capitalized off of the first rejection here, right? You could have easily caught sells all the way down to here, which this is a lot of room. This is maybe like a single daily candlestick, doesn't look that big, but you go down to a 15-minute time frame, this is a huge move. Like when I was having my 100K days back to back, I was only catching moves maybe like this size, nothing like too extraordinary, nothing out of like the major question, just with a bigger position size. What did I do the following day? Okay, well, let's wait and see. Where can I possibly sell at? I could possibly sell here, here, and then here. And then wait and see where price actually rejects. And then I'll take a position. Let's say I'll sell here, lose, take a position over here. And this position will essentially make my loss back plus all of this extra profit, right? So you could take a retest and a rejection multiple times off of the same exact level, you know, like kind of like the same thing that happened over here. Like, let's just say you were looking to buy for whatever reason, just for example purposes. You saw support down here and you're like, okay, well, I could have bought, you could have bought in here, you could have bought in here, you could have bought in here, you could have bought in here. The majority of the time, price completely rejected, right? And essentially, you can kind of already see where the edge is in the market and where you can have an edge inside of the market because price has a high probability of rejecting and going off of these levels. This is why we trade these supply and demand levels. Out of, call it 5 times that you would have bought in at this area of support. I'm giving you a random example. I'm not just telling you buy at these random support levels, right? You would have made money 1, 2, maybe 3, lost here, and then you would have made money here again. You would have made money 5 times out of 4, or 4 out of 5 times.
Thanks, bro. That was explained amazingly. Also, when do you think that podcast is gonna come out with what's your name, Claudio? I'm looking forward to it, bro.
Claudio's actually right here next to me. He just
Oh shit.
yeah.
What's up, bro?
Yeah, bro. I mean, probably next week.
All right, bet. Thanks, bro.
Yeah.
Yeah, I had a question real quick.
Yeah.
For GU, I was looking for buys from like the 1.16 area. What do you think about that? Like that 1.16, that whole entire area.
I think it's perfect.
Okay.
I think it's. I mean, you can kind of already see it like taking effect where price is already pulling back into this area here. Like this is the highest point. This is the lowest point. Like you can start looking for buys from this area here. I think it's great.
Okay. All right. Thanks.
You're out.
Yeah.
When do you think the NDC section is going to be dropped on the course?
I decided to drop it when DTI 2.0 drops.
And when is going to be done?
I'm shooting for DTI 2.0. I mean, the way I want to redo things is completely redo the entire course. So I'm going to try and do it by, let's call it January 1st. Kind of drop it as like a new year, new course type of thing.
Yeah, thank you, man.
No problem.
Yo, Raul.
Yeah.
The indice class you're doing tomorrow, is that more so for like newer people that aren't privy to what we're already learning, or is it like some new stuff that you haven't broken down yet for like people inside DTI?
It's not really like for those of you guys that are in DTI, it's not required. It's you guys don't have to go and buy it. Like that's why I don't like push you guys to be like, yo, I'm doing this. If you guys want to join, then join. Right? I just did it solely on the free Telegram because the tier to get in is a lot lower. And for the people that can't necessarily afford DTI, I'm kind of doing it more and catering more towards them, if you call it. If you're in DTI already, I don't think it's necessary nor required for you to get it. But if you want to just continue like your education with myself, then you can. There's no problem with it, especially if $100 doesn't kill you,
$100.
Yeah, it's like the indices class like 120, 127, something like that.
Appreciate it.
Raul. Hey, Raul, you still using the same broker?
Yeah, I am. But
You
bro,
think about changing it?
no, I'm not thinking about changing. I am changing it. I just haven't found an alternative. Like I even contemplated like completely switching the platform that I trade on to trade on like TD Ameritrade and really trade like SPY or the Dow Jones on there. Just because like, bro, I lost going over like my journal, going over my account histories. Like there's been trades where I've literally lost tens of thousands of dollars in slippage. It's ridiculous.
Let me know if you find a good broker. I'm looking for one.
Bro, I'll see. I mean, the broker I trade on right now, which is Athens, is not bad, but the slippage is costing me tens of thousands of dollars. Like, I could have probably bought another Lamborghini. Swear to God.
How about futures? Have you thought about it?
Yeah, I mean, I've thought about everything, but it would be a whole new learning curve for me to go and completely trade like on a different platform, like on TD Ameritrade or like on any of those other future platforms. Like, to be honest, it's very enticing. Like I'm really like very interested into it, but then like I don't want to feel like I'm slowing myself down. I'm always down to learn something new. And it's a lot easier to deal with those types of regulated brokerages when you trade futures and stuff like that, simply because it's just wire transfer instead of, oh, you got a wire. Yeah, I mean, depending on the type of quantity that you guys are trading with, you could probably buy like $5,000 worth of crypto on a debit or credit card or an ACH payment. But like when I do an $100,000 deposit, I literally have to wait for the bank to open, go to the physical bank, send a wire, come back home, wait for the wire to hit my crypto wallet, lose maybe 3-4% in fees, which off the bat right there alone cost me $3,000-$4,000. Send it to the broker. The broker has a 1% deposit fee, lose another $1,000 before it even hits a trading account. So if I want to deposit $10,000 into a trading account, I already lost $6,000 off that just in fees.
Damn.
So then I plan. It's like, okay, well, I'm going to deposit $100K. I'm going to have to realistically deposit $110,000 just to cover fees. So, I mean, I'm kind of looking at all options. I mean, right now, the way it sits, I'm just going to trade on the rest of the year on the current broker that I'm trading at. I'm literally 30% of the way to my goal, including my withdrawal. I have 40% of the way to my goal. Once I hit my goal, I'm withdrawing all my money from that brokerage, and then I'm going to do more research on other brokerages. Like, I know of other brokerages that I could potentially trade on, but I don't trust those brokerages.
So how could you tell your loss in the slip is like, do you see where you wanted to enter from and where it put you at, or like how do you tell that?
100%. And I experienced a lot of it live too. Literally, I would literally place my order right where I want to get in, and then it says order pending. A portion of the order will get filled after price goes in my favor, and then the rest of my order is still pending. By then, I should already be up like $10,000, and I'm still actually down. I'm actually down.
Yeah, that's lame.
It's so annoying, bro. It's so frustrating.
Yeah,
I remember I got so pissed off one day. There was one day I lost out. I missed out, and I actually ended up taking a loss because my entry was so ass because of the slippage. I literally missed out on an extra $20,000. I missed out on a $20,000 profit because where my orders put me in basically was right next to my take profit. And then by the time it hit my take profit, I was up maybe like, I was expecting to make like $20,000 on that trade roughly. I was up like $3,000-$4,000. Price completely pulled back, and I ended up losing like $16,000-$17,000. At that point, I said, "Fuck this broker, I'm out, bro."
You think it's because they can't handle like your volume, your your
I don't know why
money?
they put in. I don't know, because in my head it's either okay, this broker's be booking me and they don't have enough traders on the other side to fill my orders.
Yeah.
The position size with my leverage on an A book isn't sufficient enough, but my order should still get filled because there's enough liquidity. I don't know. I don't know what's going on there. Why my account was getting slipped. I don't know if anybody else with big positions was getting slipped. And it only happened. The slippage only happened to me on US 30 because when I was trading GJ and when I was trading gold, it didn't happen to me on those pairs. But it happened to me on US 30 and the Nasdaq.
First of all, they're making a big mistake putting your B book.
I mean, whatever the risk department sees, I mean, I'm not gonna lie, like some brokers have a really great risk management team. Like some brokers will literally have like a $30,000 a month salary, not even commission, for their risk management team to determine, like, even if you're a profitable trader, I've seen some brokers do some crazy shit where they kind of like, I don't want to say the word predict, but they estimate when you start going into a losing streak based off of your historic trading patterns. They'll B-book you right when you get into your losing streak and then take you out right after you get out of your losing streak. Like, it's crazy. It's crazy.
Yeah.
So, yo, Raul, I have a question.
Yeah.
So, what's like the best broker for like a beginner for a small account of, let's say, $3,000?
Any
Or
broker doesn't really matter, to be honest. I just don't like brokers that are shitty, in my opinion. But any broker, like, your orders aren't going to get slipped with $3,000. I mean, even with $100,000 in your trading account, like your orders shouldn't get slipped unless you're using like a huge position size. Basically, like you can pretty much go to any brokerage.
Damn, I was considering changing to Forex. Now I'm gonna have to think about it.
I mean, it's different. Trading unregulated versus trading regulated has its pros and cons, you know, same thing as trading regulated versus trading unregulated. They both have their pros and cons. I mean, I've never experienced anything negative. I think there's one time where I experienced a broker. This was years ago. They were like one of the first like unregulated brokerages offering crypto. I made a deposit. It was like nothing crazy, like $500, and my deposit never went through. And then the broker ended up getting shut down later on. And they had to pay a bunch of fees, and the broker got shut down. I don't know what happened to the client's money there. I've experienced, I want to say two negative things, right? I've experienced one broker where I lost my deposit, and then I experienced another broker where basically that broker, I got an email saying that broker was going under investigation. I withdraw my money, but the broker is still up and running today. So those are the only really two negatives that I've experienced. Other than that, it's other stuff. I mean, if the brokers are like really like dickheads, right? There was one time where I had a broker ask me for like proof of income, proof of verification, proof of funds. They wanted me to send bank statements to show that I had the money in my bank account to back up the type of money I was depositing. They wanted to see business information, proof of income, for me to actually withdraw because it was a pretty big withdrawal. That was one thing. But other than that, like I haven't really experienced like too many negative things. And this is in the span of like 6.5 years of trading on a lot of different brokerages. Especially if you're not trading like a shit ton of money, like you'll be fine.
I just had a quick question on gold real quick.
Say again?
I had a quick question on gold real quick. Like the 1760 area, like if you had like a good sell signal, that'd be a good area to put a sell, right? Because I don't trade gold too much. That's why I'm just asking.
I
Like
mean,
I had it marked out already.
I personally wouldn't look at gold because essentially what you're trying to do is pick a top and you're fighting all of this, right? Compare the buyers to the sellers. The sellers did this, buyers did this, right? Buyers did this, sellers did this. Buyers did this, sellers are doing this right now.
But even if the 1760 area is like a major like resistance area, like it's a major area like in general.
I still wouldn't go against it because I mean it's kind of like how can I put this in an analogy? I mean, It's literally like you see a train coming at you at full speed, and although like the train has stopped here at this stop before, like you're gonna throw yourself right in front of it and anticipate it's gonna stop. You know,
Yeah.
I would wait again. Like there's gonna be a lot more risk involved when you're going against the trend because again, like just you trading with the trend, you're gonna have an edge in the market regardless, right?
But
Now you're kind of eliminating that edge a little bit more by trying to go against the trend. So I want to eliminate your edge. You know what I mean?
Isn't there like times like when we also trade with like the supply and demand zones that we go against the trend too?
Yeah, 100%. But again, like the thing is, we wait for all of this.
Mm-hmm.
You know, we wait for all of this consolidation and multiple rejections to say like, okay, we're most likely rejecting this area, and then we wait for the daily rejection to make that better identification. Like, hey, you know.
Oh, so you wouldn't say 1760 is like a major area then? Like, even though it has like
not
I think
really.
daily, it has like very nice areas where it like hit it pretty well.
I could see what you're seeing, for sure. But personally, with the way momentum is going right now, because remember, we don't want to just see price come to a supply and demand area. We want to see like momentum slowing down to really start going against the trend and make a hypothesis like, hey, we could reject.
Yeah, I mean like as if like let's say we saw it consolidating there and we saw like huge sell signals over there.
Yeah, I mean,
I don't mean like just it going there and then we just sell it. I mean like if we see.
Okay, I thought you meant going there and just sell it.
No, I don't mean like it goes there and we just place it. So I mean as if like we see sell signals, like we see it consolidating, we see the wicks coming down, like it rejecting the area. That's what I mean.
Yeah, you definitely could for sure. I would just not again use a big position size because you're going against the overall flow.
Yeah, and then I just had a quick question. I know you don't trade like certain forex pairs, but can you go to the USD CHF for me?
USDC what?
CHF. That's what Swiss. No fault. I had it marked down because I usually like trade this pair a lot. So like my like where I have the line is at 0.96281. Like I have that as a zone of like major support and resistance area. So what I was seeing right now was like it basically just came down there right now.
0.9 this right here?
Yeah. Because if you go on the 4 hour, like you can see on the 4 hour, like there's a huge amount of consolidation.
Yeah, I see it.
Yeah, so like I saw it hit there right now. So what I was originally seeing was because I know that huge drop was just like the news. But if it was to come down to that area, right, and then I see like major consolidation and then buy signals, that'd be a good area to buy then, right?
I mean, theoretically, every supply and demand zone is a good area to buy or sell. Right? It's about the probability if price is going to bounce up from here or not. If you want to wait for a double bottom to buy, that would definitely be the best thing to do.
Yeah.
But I feel like what has a higher probability of potentially happening would be with this momentum, going with this specific momentum, would be for a break, retest of this area for then price to come back down into this area here, especially kind of like basing things off of the weekly. Like this just looks like a straight train going down back into this area here.
Yeah, that was one thing.
If you want to buy, you could.
The other part, the other thing I was seeing, like that was just one thing. The other way I was seeing it was like I have 97.496. I have that zone marked out too. So I was seeing if it would reject that zone and then look for sells over there.
Basically around here. Yeah. I mean, if you're looking to buy, then you could wait for double bottom, buy the double bottom, stops under here, that's fine. Or you can wait for a break of the highs, which would be a lot safer of a buy, and then for price to do something like this.
Yeah, and then that's exactly where I was looking like to sell. Like if it gets to that major point, because it had like that's like a major zone too.
Yeah, 100%.
So like those all look like valid, like in your eyes.
Yeah.
Okay, thanks, dude.
Yo, Raul.
Yeah.
Could you go back to US 30? Those buys, could you go over like how you would have entered into that position and you exiting as well?
So basically going to the hour time frame, seeing the initial pump with CPI, I would have definitely waited to do or to make any decision here because now we're trading at resistance, right? I would have waited to see if the next hour candlestick would have had a huge wick to the upside, maybe some form of a pin bar. If this would have been the case, it would have been sells. all day long. I definitely would not have just sold here to sell here, especially after this 115-minute candlestick, and this candlestick being very weak, and this candlestick being very weak. Definitely would have seen all of this consolidation here on the 15-minute time frame. Now, right once price closed above the hour time frame, it would have been a little bit more difficult to say if I would have immediately waited for the retest here after this candlestick close and then looked to buy, or wait for the next hour candlestick to come down and retest. Because remember, just because this candlestick closes above doesn't mean it's like a very clear break. You want to see another candlestick close above as well, because this is still kind of like a close on the zone. So give you the example that if I would have looked to buy, right, first things first, I have to ask myself, okay, well, if I'm going to look to buy, where could we potentially see price go next? And I'm going to make that decision based off of the hour time frame, right? That's going to come down to, okay, well, if price is rejecting this zone right here where we currently are, right, we could definitely see US 30 come back up into this area. Then if it breaks that area, it can come up into this area, right? So these are two price points that we could see US 30 continue to go up from, right? So with US 30 then breaking above this area, I'm going to give you both examples of how I would have played this, right? 5-minute time frame, we already had the break above, which is going to be this candlestick here, and I can already identify that, hey, we have pretty much support all throughout this range here, right? Price came down, rejected. Now, if I would have taken a position off of this rejection, saying like, let's go, I go to like the 1-minute time frame, and I don't want to lose anybody, and I see this engulfing candlestick, and I say, okay, well, if I set myself up for a buy here, where can I set my stop loss? Realistically, we have like the median of support being all the way down here. Would this be a buy worth it for me, where if I'm going to buy off of this 1-minute rejection here, because this is the close above and break above, I believe, then let's see what the risk reward would have potentially looked like, right? Let's say I take an entry here and I place my stop slightly under this low here, which is going to give me a 100-point stop loss for 2 times my risk. That's a pretty big stop loss size, and I don't personally think a position like that would be worth it, right? Now, give it some time to actually wait. Let's see if we can get another retest of this area all the way down here. Once I would have seen that this candlestick actually rejected, go back to the 5-minute time frame. It's a lot about flipping through time frames as well, right? You have another essentially candlestick close above back support. That was the previous 5 minutes, right? Now, I have 2 options here. I can either wait for, if I'm feeling a little bit more aggressive, okay, well, we already rejected support here. I know I want my stops to be down here. I can wait for price to kind of pull back, retest, reject, and look to get another retest and a rejection off of this area, and then look for price to go long. Or I can wait for a retest and a rejection on a higher time frame, such as a 15-minute time frame, let's call it. Ultimately, there was a lot of consolidation around this level because there was a lot of decisions being made at this level. When you see consolidation, that's because decisions are obviously being made. If I would have taken an entry off of the hour time frame, then the entry that I would have taken would have been essentially off of this rejection right here, off of this candlestick, seeing bearish momentum slowly get weaker and weaker. I would have probably looked to enter pretty much right when this candlestick closed, or right when the candlestick closed somewhat above with the stop loss under here, and then would have had a little bit of a bigger target, almost a 3-to-1 risk to reward ratio, which then price pumped up, continued to go down, came back down, retested, rejected, and ultimately later on throughout the day ended up hitting that target and then completely going through and hitting this target. Can't say if I would have held throughout the entire thing, but definitely when price is up here, I would have probably gone out somewhere along and break up these lows here for sure, right? Now, to give you a higher time frame example, right? 30-minute time frame, we have initially a move up, right? So I know that at any point in time, price can still come back down into this area, but as long as price rejects this area is definitely still valid, and we could definitely see buys off of this area. Go back down to a 5-minute time frame. Essentially, what we have here is a big move to the downside, but notice that we still didn't break under the median of this area of support, and what we essentially have here is support. Let me kind of make this a little bit horizontal line here. What we have here is a little bit of a range where we had more recent price action reject. This was the lowest point of the first buying opportunity where you could have potentially gone in on buys. Anything under this area here, I wouldn't have looked for buys. I would have definitely started looking for sells, right? Why? Because it's a structure point. This is the lowest point price reached before continuing to go up, and anything under that, I'm not interested in buying, right? Once price would have came back down into this area, because again, it's all a median, it's all a zone. You could have seen this candlestick here come down, close, reject. Ultimately, I would have been probably very hesitant on looking to buy pretty much right away, just simply because of the way this candlestick actually closed. In my mind, it would have been like, okay, well, we have the overall median of support being down here. So as long as price can kind of maintain above this general zone that we have here, we could definitely still look for buys. 5-minute time frame, we see a rejection of support here. We see a break of the highs. It would have been, again, very difficult for me to make the decision like, hey, I would have bought right here. More than likely, a lot of the times if I'm feeling aggressive, I would have entered right here with a smaller position size. If I'm normally trading like 5 lots, I would probably go 2.5 lots or 3 lots here. And if I have another opportunity to enter maybe along the break of the 5-minute highs or another break over here, I would have entered another 3 lots or 2.5 lots, whatever the case might be is. Because at this point in time, I would look at it from a risk reward perspective. If I took a position here and got out maybe somewhere along the break of the lows here to be a lot more realistic, I'm not going to say I'm going to get out perfectly right here. Most likely what I would have done is continue to hold my position, seen this pullback here, seen price continue to go up, double top, break of the lows is where I would have trailed my stops, gone stopped out maybe somewhere along here, secured a profit from maybe this point to about this point, which is a pretty good move, right? I would have been like, okay, let's say I'm up 20K for the day, right? If I'm up 20K for the day, I'm going to risk maybe $5,000 on an entry on an aggressive position here because it doesn't hurt me. I'm still up a net 15,000 for the day, right? I'd enter my position along this area here, and then stop loss would be a little bit more generous under the lows because of the volume that we still see on the 15-minute time frame, although the probability is still very high. Why? Because price is attempting to continue to make higher highs, right? And I know throughout this period in time, it's like 1 o'clock, as you guys can see here, which is lunchtime, which typically is you're going to see a pullback in that area. Around 1:32, we'll see a continued move in the direction of the trend, which is typically what happens along this area here, right? Which we then see volume come pick back up after lunchtime, and then ultimately price continue to go up. And then most likely, I can't tell you if I would have 100% held. I would have definitely looking to take profit off around this area here. If it would have just kind of like broken above like it did here, then came back down, retested, rejected, I would probably would have continued to held and trailed my stops under this low here, and then held it to about this area here. Then I don't know if I would have held it anywhere beyond past that point to the next targets. Although, you know, in a perfect world, I would have, you know. So I mean, hopefully that gives you like,
bro, real quick, your stop loss on that move potentially on that 5-minute would it have been to that, you know, around that. Around that week.
Like under this point here, under this point right here.
Okay, under that point. Okay. Yeah, I'm trying to get better with like, you know, maintaining my trade, bro. Cause let me see where you got price at now. Cause bro, I had an entry where on that, I got it on a buy this morning around like 10, and my entry was like 33,265. So I got in kind of like where you got in that zone. What are you talking about? Nah, a little lower.
Like here?
Yeah, 265. Yeah, so around there. I got in around there, bro, right? And so at that big push, I was up a 2-1. And so I moved my stop loss to break even, and that wick right there to the right took me out. So I got in around there. Go to the right. Around like 11 o'clock.
It's like right here.
Yeah. Yeah, that.
If you got in here and you got stopped out at break even, most likely because you got stopped out by this candlestick.
Yeah, or the other one. I think it was the one to the right. That one.
I mean, shit, bro. Let me tell you.
It wasn't that one. It was that one.
I was about to say, for you to get an entry here, hold all of this profit, and then get stopped out here, like you got some.
Yeah, no, I got stopped out there because I was up a 1-2. So yeah, I'm sorry. It was the first one where you had it at. So yeah, bro, because I was up a 1-2 and I moved my stops to break even, and I really got wicked out and then it shot up.
I mean, bro, again, it's all relative to the size of the move that you're looking for. Like If you're looking for a big move, you really got to give price enough room to fluctuate and pull back on you potentially to look for that huge move. It's all relative to what type of position you're looking for. Because if you're on a 5-minute time frame and you're looking for an 1,000-point move, one, you're gonna have to have a pretty big stop loss, and two, you can't be moving your stop loss at a break-even point so quickly, especially not at a 1 to 2, because on a 5-minute time frame, a 1 to 2, you'll get pretty quickly. Versus a 5-minute time frame on an hour time frame, 1 to 2, take a few hours to actually play out.
My stop loss was 100 points, so I was up 200 points when I moved it.
So your entry was here. I'm gonna assume 100 points is right here.
Yeah, it was 33,264 with 100 points.
33,264. Damn. 33,264. That was your stop loss?
No, entry. That was entry.
Yeah, I know that.
So 100 points from that.
Like right here.
64. Yeah, so around there.
Well, first things first. One, you have to take US 30s volatility into account because typically currency pairs aren't as volatile as US 30, right? So 100 points on US 30 realistically is not much, right? And you were up, call it 200 points at the highest, you know?
Yeah, I was.
Especially trading a 5-minute time frame, like that's a pretty good move. Like you should have at minimum, if you didn't close your position, at minimum secured profit, right? And on top of that, if you would have gone stopped at a break even, like you had another buy opportunity right here.
I got back in around about 1 o'clock, and I caught a 1 to 2 on that move.
So the trading day went great.
Yeah, it went good. I mean, I was profitable, but yeah,
that's what
that entry was around 4. So I got in off that entry was around. The other one was around 33.
So now let me ask you a question, because I mean, if you got out of a 1 to 2 before and you got out of a 1 to 2 again, why did you continue to hold that a 1 to 2? Because just off of the basic information that you gave me right now, it seems like you're pretty decent at catching 1 to 2s. If you would have closed at a 1 to 2 both times, you would have been up 4R today.
Yeah, I would have, bro. And honestly, the time of day, it was like 11 o'clock, around 11 o'clock or so. So I felt like volume had a chance to keep flying. This trade, I got out of it around 3 o'clock. So it was in the day.
Yeah, but I mean, like it comes back down to like, you know, sure, sometimes you can have home run trades.
Yeah.
But your bread and butter is what's going to build your account.
Yeah.
The home run trades are nice. Don't get me wrong. But if you're always chasing like a home run trade, like if you see on average you're good at catching 1 to 2s.
1 to 2s is.
I'll give you this example, right? You could take 10 trades, right? If you're always chasing a home run trade, let's say you hit a home run trade twice and you end the week off at a 1 to 4, versus if you take 10 trades where let's say you win and you're only targeting a 1 to 2, you win, I don't know, call it 60% of those, right? And you're targeting a 1 to 2, you're going to end the week off at way more than a 1 to 4.
Yeah.
And here you're incurring a bunch of losses, right? And in this example, with the home run trade, you only won 2 out of 10 times. Sure, you caught a 1 to 7 maybe twice, but ultimately almost the same exact results. You would have made more money here at a 1 to 4 because you won 6 out of your 10 trades, right? Only losing 4 positions. Essentially, you would have made a lot more money just catching your 1 to 2s versus always trying to get a huge trade. Because like I said again today, like if you would have closed out a 1 to 2 here, gotten back here, closed out another 1 to 2, you'd be up 4R today instead of just 2R.
Yeah. Sometimes though, I like some of my trades, I'll try to get a 1 to 2, and then like it'll be like a 1 to 1.5, and then I'll like lose the trade, or like kind of break even, or maybe lose the trade. If it reversed too bad, bro, I cut it like around break even.
Say it again?
If it's at a 1 to 3 or something. I'm sorry, not a 1 to 3, like a 1 to 1.5. If I'm aiming for a 1 to 2 at least. And sometimes those 1 to 1.5 trades are kind of reverse on me.
I mean,
I'm
that's
using a 100-point stop loss on every trade too, so that might be a part of it.
I mean, I wouldn't say like stop loss size could be a part. I would say what's more important is what's your stop loss compared to your targets, and do your targets make sense?
Mm-hmm.
You know, because I mean, like a 200-point move on US 30 is one candlestick. I mean, just look at this candlestick. This was a 200-point move. You know, you're not looking for a huge move out of the market. I would say you're looking for a pretty realistic move out of the market every single day. You know what I mean? I mean, just this move alone from here to here is 200 points. That's a pretty good move.
Okay, yeah. I mean, with better entries and stuff like that, I mean, I just gotta practice, getting better entries where I could put it like below the wick where the stop loss might be 60, 70 points.
Bro, to be honest, like when it comes to like your targets, it's all relative to your stop loss size. Obviously, today there was a lot of extra volume, so that's why like we see a 1 or 2 in the span of a 5-minute candlestick. But if we look at like a normal trading day, such as this specific day, like from a stop loss from this point to this point, it's like 50 points. You know, and this right here is your 1 or 2.
Bro, I lost that trade yesterday, pissed me off, bro. Because I was up and it was so choppy, I just cut it at break even. The minute I cut it at break even, bro, like 10 minutes later, it dropped like crazy. I was in on sales.
Yeah.
I was pissed, bro. I mean, I was just like, it's just choppy. I was like, I'm gonna just call it a day because I'm like, I just wasn't feeling it. So I was like,
Raul, do you know the
that's why you gotta look at your journal, because if you see in your journal a lot of your trades are breaking even and you would have made money, maybe it's time for you to like hold your positions a lot more, either stop loss or take profit. You know, like there's so many different things that you could test out. Ultimately, trading is a game of trial and error, right? So if you see a lot of your positions, you're up a 1 to 1.5, you move your stops to break even, get stopped out of break even, but then goes to your 1 to 2 target, and that happens 3 times, a week, then maybe you should just try and instead of moving your stops to break even, cutting your loss in half once you're up to the point where you typically move your stops to break even. Does that make sense?
I got you. Yeah. So instead of like, if I got 100-point stop loss, what's I'm up like a 1 to 1.5, cut that stop loss to 50 points.
Yeah, minimize your risk.
I got you.
Instead of moving it to break even. But again, these are only ever things that you're gonna see with your journal. You got to be keeping track of your journal, so then of your progress and your trades, so then you could go back and see what's going on with your trades. That's the only way you're gonna get out of like a losing or a break even stage to move to that like consistent profitability stage.
So when you manage your trades, do you manage them on a 5-minute and minute chart or like?
Typically, I see myself on a 5-minute chart a lot nowadays.
Okay, because I'm trying to get better at trade management. Because I would make a lot if I like what you just did, where you like, all right, if it break these lows, here, then I'm gonna get out. Because if it does that, I would just wait for another move and see what happens.
Yeah,
around my entry if it gets there.
The thing is, like, oh my god, what?
Bro, I seen that too, but I just did not want to gamble with that news, bro.
If I would have seen this live, bro, I would think this candlestick is gonna break through my monitor and start printing in real life. That's fucking ridiculous.
Bro, I was watching. I had my phone, and when the news dropped, and my daughter was right there, and I was just like, oh fuck. She's like, Daddy, that's a bad word. I'm like, she's like, bro, that joint flew, bro.
Yeah, I mean,
Overall, I got a question real quick. Oh yeah, when do you put your trade at break even? Is like, do you have like a certain like number, like let's say a 1 to 2, 1 to 3, or like a 1 to 1?
To be honest, like I really only move my stops to break even like when I see it fit. I don't really have like a systematic way of moving my stop loss to break even. As of right now, it's very up to my discretion of when I move my stops to break even. But basically, when I know the trade is going in my favor, and if at any point in time I see that the position could potentially reverse on me, and if the position reverses on me at this point in time, I would want to be out, is when I move my stops to break even.
Bro, I had a quick question because this whole conversation was kind of reminding me of it. Like for the past couple of weeks, I feel like I've been profitable, right? But like the way I look at it is like if I'm like risking like 20, 30 pips, I'll target like 60, 70, right? but I'm not like a greedy person. So once I see like I have like I'm like up like 20, 30 pips, I'm like, all right, I'll get out. But it like I feel like the most of the trades I've taken the past couple of weeks since I've been doing it like this, it's always hit my take profit like even before I've gotten out, right? So like I've gotten out in profit. I don't even care because I got profit, but it most of the time always went to where I originally had my take profit. Like at least I think I took like because I'm doing the challenge right now, right? And I'm in profit right now in the challenge, but I would have been done with the first stage right now, 100%, if I had kept all my take profits like where it was. Because instead of making 200-300, I would have made 800-900. And it's just like I feel like once I just see I'm up like 200-300, that's still good. So let me just take it out and let me just be in profit, and I'll just look for that 1 to 2. But do you think I should sometimes just like stick with that and just like try to go to that like 60-70? How like it's like how you were saying with Rashad, right? Like go for that home run in a sense.
I don't really consider a home run trade to be like looking for your target to get hit. I would consider a home run trade to be like a trade that surpasses your target and you continue to hold.
Yeah.
Now, if your target is set, like let's say like the NASDAQ right now is trading at this area right here.
Yeah.
Target is all the way up to here. Like that's like a
that's like
current projection. I would say God bless.
Yeah.
Target gets hit, God bless.
Nah, but like the way I trade is like I'll take my trades mostly from like the hour to like the 15-minute, right? So but mostly like 30-minute. I like the middle of them. So it's like I feel like 60-70 pips is really nothing insane. I don't think it's drastic, right? Because it's a nice like time frame. But it's like as soon as I see I'm up like 20-30 pips. I'm like, all right, bet. And I see it tanking. I'm like, you know what? Let me just take it out just in case. And I end the day in profit. But then like maybe like 2-3 hours later, I'll see that it went back to where I placed my buy or sell, and then it'll shoot exactly where I had it set, like as my take profit.
So in your situation, what I would do, I'm emphasizing journaling, just simply because, like, the amount of people that actually don't journal, in my opinion, is a lot higher than what I probably expect. But trading is probably one of the most difficult industries, not just to get into, but to be very successful at. Because you could have success in trading, make money here and there, and maybe end the year in a net positive gain. But if you really want to take your trading to the next level, you have to analyze what you're doing and seeking to improve from your own historical trading. And the only way you're going to be doing that is if you're literally journaling and logging your trades, because you need to be able to go back and look at your last 20, 30 trades. Hey, out of my last 20, 30 trades, I see that 15 of my trades that went, call it green, were 75% off of my initial take profit. It hits my take profit, but I closed super early and I costed myself 10 grand, whatever the case may be. Is like exactly the example that you just made, right? I'm not holding to my targets, right? I could have passed the challenge right now, but instead I'm still doing the challenge. Imagine if you were trading huge capital.
That's exactly what I do. But you know how I look at it?
You're costing yourself like tens of thousands of potential dollars.
Like exactly how you said that. Like if I was trading like bigger capital, like I even like the way I have looked at that, right? But it's like my brain, instead of what you said, which 100% makes sense, it's like what my brain says is like, all right, if I had a 100K account right now, I know I could have made, let's say, like 60-70K, but I would have walked away with 30K. And then in my head, it's like, it's still 30K. So it's like, who am I to complain about if I could have made 60-70, but I walked away with 30K? Because
I can agree with you to a certain extent.
Yeah.
Right?
I just don't want to be greedy. Like, I don't want to lose it.
Yeah, I understand what you mean. 30 grand is still like amazing money. I mean, for Claudio to make 42 grand a day, that's fucking.
But I remember this was the first boot camp, and I remember him. Like that was
like for him to make 42 grand a day is fantastic. But one, you're settling when ultimately when you look at just your performance from a technical standpoint, not including a trading standpoint, because they're completely two different things. Because somebody can be great at creating a hypothesis and creating a whole trading plan for that specific day, and he could be amazing at pinpointing a move from point A to point B, but he's fucking ass at trading because he can't hold his positions from point A to point B, right?
Yeah.
You're cutting yourself super short.
Yeah.
It could be a problem with lack of confidence, right? Or it can even be a problem with fear, right? Which ultimately falls back into lack of confidence.
Yeah.
Essentially, you have to look at how many times you're doing this on a month-to-month basis, week-to-week basis. And if it's maybe like 1 or 2 trades that it happens and the trades hit your TP, then it's realistically not that big of a deal. You want to try and hold to your targets as much as you can, because I completely understand how you feel. It happens to me too nowadays. Like my trade that I made 15 grand on my last position on the NASDAQ, I was short from literally this point right here. My targets were down here, and I ended up closing like right here.
Bro, I looked at that. I was like, he would have made a killing if he would have held that.
I would have probably made like 80 grand, right? But I settled at 15. It happens to me too. I'm human, you know? But we have to identify these flaws. We literally have to identify these flaws within ourselves and ask ourselves, how can I improve from this?
You know what it is though? But it's like I always see myself like I'm already improving, because I don't even remember. But when you had DTL, right? That's when I first joined, was DTL in 2018. But I didn't know like jack shit.
Oh
like,
no, of course. Just by you trading every single day, you're gonna improve regardless. But again, there's levels.
Yeah.
You want to improve now to the next level. You've gone from level 0 to, let's call it, level 10. How are you going to get to level 11 now?
Well, that's what I'm saying. That's why I feel like I'm like, not like, I'm not like, I wouldn't say stuck, because, all right, before the boot camp, I was still trading like I was in DTL, right? Because I never joined DTI after you were done with that, right? So I felt like I was just stuck. Like I saw myself improving year to year, but like very slowly. And then when I joined the boot camp, it like went from here to like, it just skyrocketed, because I just applied what you were teaching back then to what you just saw in the boot camp, and it went, right? So now for the past couple of weeks, like I failed like one-day challenges like over and over, but I was doing like dumb shit, right? So, but now what I've been seeing is like when I'll do a challenge, I'll go into profit now, right? But it's exactly how I've been saying it. It's like now I see that I'm gaining the profit, but maybe it's just that I'm afraid that it might not hit my take profit all the way. But then I get tight, because I'm like, yo, I would have been done with the challenge right now. I actually would have passed like my first challenge right now. But
remember, trading is a game of psychology. You're always going to hit some form of a psychological barrier, no matter where you are in trading. I mean, you guys have seen me literally make 100K back to back to back to back, like it was light, right? Even today, I still have my own psychological barriers in trading that I'm trying to overcome. It's a non-stop game. That's why trading is difficult. Not literally, that's why I have gray hairs. But if my hair were to be black, I can guarantee you that I have gray hairs and I probably look older than what I actually am. It's stressful, you know? And the best thing to do is literally, you have to look at yourself from a third-person perspective and see what you're doing and be as honest and as genuine as you possibly can with yourself. You literally have to sit yourself down. And if you're someone that keeps, I'm not saying this you should do, I'm just going to give you random examples. But if you're someone that blows challenge after challenge after challenge, you literally have to sit yourself down and be like, yo, you're fucking ass at trading. How can you get better? This is what you're doing. You're greedy as shit. You can't hold your positions for long. You need to fix this or you're not going to improve. And only you could do that to yourself, because nobody else is going to hold you accountable but yourself. So you have to do everything it could possibly take in you to get to that next level.
But that's what I'm saying. Back before the boot camp, when I was, most of the times before the boot camp is when I was failing them, because I didn't know that much, right?
Yeah, now you're just trying to hold your positions for longer, essentially.
Exactly. Now it's like I'm doing, let's say, a funded, and I see myself being profitable. I'm like, oh shit. And it's not even like I'm thinking as complex as I was when I was in DTL. Now when I'm doing this shit, I'm not thinking that hard. I'm more so just waiting for it to get to my zones and waiting for my signals.
That's how it is. It becomes routine. It
literally, like I'll wake up and I'll look at it, and now it's like I'll see it. I'm not seeing every single time, but like the fact that I'm seeing it go into
You can
profit.
spot setups a lot easier than what you normally would be able
Yeah,
to.
exactly.
That's
Instead of
called
doing
growth. It's amazing. You know?
yeah. So now, like, I really feel like I could be at like a even like bigger level than where I am right now. Is if I was just to hold it to where I said. It doesn't even have to be exactly there. It could be like a couple pips lower than that, but just
Exactly. Again, like you have to ask yourself how. And then you have to put that, you have to give yourself the resolution to your problem.
yeah.
And the
That's
only
what,
way you're going to do that is literally like tracking your performance and logging every single trade that you take. Doesn't matter whether it's on Excel. Doesn't matter. I mean, what do you mean?
yeah. I feel like it's more as it's just been like rinse and repeat. Like I'll make money. I'll be in profit. I'll take it out, and then it'll go exactly to where I fucking said. Like it's been like that for like the past 2-3 weeks now because I've been taking the challenge for like the past 2-3 weeks. So it's just like the same thing over and over and over and over. I'm like,
Well,
fuck.
to give you solutions to your problem, I mean, there's many ways that you could potentially attack this. One way is by creating some form of a trailing stop loss type of strategy, where
Mhm.
maybe as price goes down 10 pips, you lower your stops 10 pips. So you trail your stops per every 10 pips, that price goes in your favor. I mean, that would really be one way that you could do it. Or you could do it from a perspective of risk to reward, like, okay, well, I'm risking 20 pips to try and gain, let's call it 60 pips in this situation. Once I'm up a 1-to-1, I'm going to move my stop loss to break even. Once I'm up a 1-to-2, I'm going to move my stop loss to a 1-to-1. Once I'm up a 1-to-3, I'm out.
Yeah, that's literally like honestly from like yesterday or like day before. That's what I was thinking about doing now because I'm like, all right, one, I just don't think I was that confident in myself before in the past. Now, I always like my brain always tries to doubt myself. It's always like, even though I've been in profit the past 3 weeks, I've been in profit. It's mostly like 8 out of 10 is blue numbers, but it's just like my brain always tries to tell me like, oh, but what if this? Oh, what if you're not this good? What if you're not this? Like, I always try to make it think like it was
That's
just
the thing.
luck.
That's the thing, bro. And this is something that me and Claudio literally spoke today in today's podcast. Consistent profitability is a mindset. You
That's
have
what
to
I'm saying.
adopt the mindset. You literally have to adopt the mindset. You need to tell yourself every day, I'm a consistent, profitable trader. I can do
That's
this.
literally what I
know
started
I
doing
can
last
get to
week.
where I'm gonna be. You literally like. I'll give you the same example that like I gave to Claudio earlier today in the podcast. Right, a trader could come in and he could blow 10 challenges. Right, just as an example of the challenge, he can blow 10 challenges. Right, he's down. Let's call it 6K.
Mm-hmm.
He can go in again for the 11th time, pass the challenge, pass the verification, and get one payout. Even if that payout isn't that large, but let's say it's a $25,000 payout, he just essentially made back all the money he spent on the challenges plus an extra profit on top of that. And let's say it took him an entire year to do that. Essentially, he made profit at the end of the year. He ended the year in profit.
That's what I'm saying. Because
So
1-to-4.
Because it's like, bro, I feel like my brain used to tell me like it's just luck, right? But then like recently I've been telling myself there's no fucking way it's been luck for 3 weeks fucking straight. I'm like looking at it every single day.
It's literally probabilities. It's all probabilities.
Exactly. So I've been telling myself more. I'm like, nah, like it's actually me doing it. Like I am doing it. I'm not trying to be overconfident. You know, like that's my fear. I think it's like even though I'm telling myself, no, I'm confident. Like I got this shit. Like I'll feel like I'm thinking I'm being overconfident when I know I'm not.
It's a game of balance. You know, you have to be confident, but again, you can't be overconfident. At the same time, you have to be fearful, but then you can't be too scared.
Exactly. So I try to
look at it from a probability standpoint, a risk standpoint, and not just like this, not just trading. You have to look at it from a risk standpoint. You got to look at everything from a probabilities and a risk standpoint. You know, if you're gonna go bridge jumping with your friends, what's the probability that you could break your foot? You know, hey, it's a fucking 40% chance that if I jump off this bridge into the water, I'm gonna break my foot. Do I want to take this risk? No, then don't take the risk. You know, the same thing applies to trading. I probably have a 60% chance of losing this trade. Is this worth me putting 10 grand risk at? No. So don't take it. You know?
That's what I feel like now I'm just gonna like I think the trailing part is like that's already what I was thinking from last week. So I'm really gonna do that. But I feel like if I have confidence in myself, I just need to keep that confidence. I just start telling myself like, nah, it's just luck. You're doubting it, like blah blah blah.
No, like you have to be confident. Like even if you're not at a point where you want to be in your trading and you're at break even, like you still have to tell yourself every day, like, I'm a consistently profitable trader. I'm going to get to where I'm at, where I want to be. Like, you need to be able to speak that not just to yourself, but literally into existence, and it'll happen. You're only going to limit yourself to what you allow yourself to get to. If you think you're not going to be the type of trader to make 50 grand a day, then you never will get to that point. You have to genuinely believe in yourself and genuinely believe you can get to where you want to be. Same thing when I first started trading. It was absolutely insane to me that people are making 100 grand in a single day trading. Did I believe that I was going to get there? Yes, I did anything possible to get to that point. I didn't know how long it would take me, but I didn't care. I just knew when I got to that point where, I literally just pulled 100 grand out of the market. How many people could say that they came into their office straight up in their boxers, made $100,000, went and then bought whatever out of the market? Not many people. But you know what? I literally hyped myself up for 6.5 years to get to that point, and now I have everything that I have because I believed in myself. It's like as simple as that, you know?
Thanks, dude. I appreciate it. I needed that.
Yeah, bro, no problem.
Yo, Raul.
Yeah, it's good, bro.
To the bro that was just talking, what helps me is I always tell myself you can't be a bitch on the charts. Like, you just can't do it. That just helps me out, bro.
That's true. That's true. Like, again, like you have to have like a certain level of confidence. But then you gotta also like understand the risks that are involved with what you're doing, right? And also like one thing that'll help you out is also not trying to push yourself to level up too fast. Because if I'll give you the example, I saw this YouTube video one day of a trader where essentially he lost $800,000 in one trade, right? And it was to the point where he's never seen a drawdown of $250,000, right? And he literally hid his P&L. He literally hid the button where he could close and sell all of his positions and close out a 300K loss. And price kept going against him and against him and against him and against him. And he lost 800K out of his $1.3 million trading portfolio. He recovered some of it later on throughout the trading day. But imagine, even a professional trader such as himself can still make those mistakes because, again, we're all human, right? So just because you guys could see, this guy made 4 million this year, this guy made 1 million this year, this guy made 5 million this year, right? Those mistakes can still happen. So you have to look at everything from a risk standpoint and then have the confidence and the discipline to execute on your actions. If you say, I'm going to get out if US 30 or the NASDAQ breaks 10,883, then you have to get out there because you made that decision in a logical state of mind, right? Vice versa, when it comes to your take profits, prices at my take profit, let me get out here. It's a combination of a lot of simple concepts put together.
Man, I got you. Thanks, man. I really needed that.
Yo, Raul.
Yeah.
Do you know the Nas shorts up there?
Yeah.
I took it, but I got stopped out at break even. Not there. Higher. There.
What?
Higher. I thought
Here?
No, higher. Can you go a bit higher?
Here.
No, the other.
Over here.
Yeah, there, yeah.
Okay.
So I took shorts from there and I was targeting.
Shorts from where?
Pardon?
Here? Where'd you short?
Yeah.
Right.
There, yeah.
You shorted right here.
Yeah.
Like this candlestick.
No. When it was breaking the lows.
So you shorted like here.
A bit higher.
Like here, call it.
Yeah, around there.
Okay, what were your targets?
The yellow line there that you have marked.
Your stop loss?
Above those highs there.
Here?
A bit higher.
Call it here.
Yeah.
All right. So first things first, let's put this into perspective, right? You essentially went short. I see why you went short in this area here, knowing that there's resistance and support all throughout this range right here. why did you
Mhm.
get out at break even when price hit a major area of support?
No, I brought my stops to break even when it hit that support.
This one,
Yeah.
you moved your stop loss up to here instead of up here in profit.
Yeah, I brought it. I brought it to my entry, so I don't know. Like I thought, if it retraces back, then I'd probably get out.
But you didn't.
Yeah.
You got out at here.
So what do you think I should have done?
I mean, it comes down to discipline because if you told yourself that, because at some point your entry was here and you were in profit here, right? And definitely I would have continued to hold. But after seeing a rejection like this and price close back above support, that should have been a sign for you to get out, right? If you didn't get out there, then you should have definitely at minimum trailed your stop loss to above this area right here. Because if price breaks that point, it's most likely going to go higher. And once it broke this point here, it went all the way higher, came back down, but then came right back to your entry. I mean, from this point to this point, you could have easily secured profits. Remember, like going back to an intraday perspective, we set our targets at areas that have the highest probability of getting hit. So in a situation like this, I would have looked to sell from this point to this point here. Then if price breaks this point, I would have looked to sold from this point to this point. What did I do? I secured my profit from here to here and then potentially secured profit from here to here. I did not catch this move, but I did catch a portion of the other move being this move right here from this point to about like this point I caught.
Okay, but the risk reward wasn't that great if I closed early then.
Yeah, because of the type of entry. But again, even if the risk to reward wasn't that great, you have a technical reason telling you to get out of the trade. What was it? Price rejected major intraday support 1, 2, 3, 4 times. Broke lower time frame structure. You have 5 reasons to get out of the trade right here.
Yeah.
And what could you have done? Secured profit. Although the risk to reward wasn't great, you're not always going to meet your risk to reward ratio targets every single day. Those are targets that you set. Now, it'll be fantastic if you do, and if you do hit your targets on risk to reward every single day, let me know. I'll give you money to trade, right? But it's not like a realistic expectation to have that every single day you're going to hit all of your big targets. If the market's giving you a reason to exit the trade, exit.
Oh, bro, I think that's one of my issues right there. Like trying to get my 1 to 2 at least, because a lot of these times, if I was to secure a 1 to 1, 1 to 1.5, I would make a lot more.
Bro, if that's what your trading is telling you, because remember, like you could be thinking something and it may be true, but you need to let your history tell you that. And then you make the analysis based off of what your trading history is telling you. If that's what your trading history is telling you, then it's a no-brainer.
Do you know the way you took that position there, the sales that you caught?
Yeah.
Yeah. How? From where did you catch that?
So basically, essentially, what I was looking at around the time was price had broken under this area right here, right? We broke under this area right here. Price had made new lows. I simply just waited for price to give me a pullback back into this range, right? Made new lows over here, made new lows over here. I waited for a pullback. Once I saw price start rejecting is pretty much when I took my position with my stop loss slightly above this area here, my targets all the way down here. Because essentially,
would you consider that as a clean break though?
Essentially, what I saw was price continue to make lower highs, right? And after price came down, rejected support, came back up, rejected resistance, and then came all the way back down, what I saw was for price continuing to go down. So I didn't anticipate there to be a form of a fake out. But then, you look at an overall median and we have price breaking under this area, literally the structure zone, literally right here, right? And it's a lot of little like minor things that you could pick up with time. Like you could see like there's a lot of indecision in this range and price broke under this indecision area here, pulled back to it, started to reject. And I decided to take a position from this point here all the way down to this point. Didn't catch the whole thing again, but my stop loss was only slightly above here. So, me just closing out on a huge trading day, I decided that the risk was worth taking because I was only taking like a $6,000-7,000 risk compared to my normal $15,000 risk I would take on a good position. But notice one of two things, right? I identified the risk, and then based off of that judgment, I actually even lowered the risk as to what I normally would have done. Because normally on a day-to-day basis, I'll risk 12, 13, 14, 15 grand, maybe sometimes even in the 20s, depending on the type of position. But this was a trade where, although the probability was in my favor, it wasn't the greatest, grade A setup, textbook setup, right? So I significantly lowered the risk. And to me, it was, if I lose 6K, oh well, but I have the potential of making $20,000, $30,000, $40,000 plus. That's why I ended up closing early at $15,000 because the trade worked out in my favor so great. I mean, it went down, pulled back up, retested, rejected, and then continued to go down right after that. I saw I was up a 3-1 and said, you know what? I'm just going to close.
Yeah.
Bro, I got one question.
Yeah.
Before I go, Top G or Jake Paul, and why?
I really feel like Andrew Tate would win. Just
Hell nah.
all the extra boxing experience, but like at the same time, bro, like I don't know when the last time he boxed was. Jake Paul's been boxing for a minute. I mean, there's so many like pros and cons. Like Jake Paul has been boxing like really old, retired fighters. Other than who was it? He didn't even fight a boxer one time. He fought an NBA player.
Yeah, Nate Robinson.
Nate Robinson. So I don't want to say Jake Paul's like, I feel like the best boxer. I feel like, he's doing fantastic, and he's obviously super smart with his marketing because he's making fucking millions with what he's doing. Genuinely, if the fight was not rigged, right, I really feel like Andrew Tate would win just because of all of the experience that he has under his belt. Especially if he were to train for it, I feel like he would win if it's not rigged.
How much money do you think they're about to make off the fight?
Millions. What you're talking about, two of the most viral people right now fighting. You know how many Andrew Tate occultists are going to go and fight, bro?
And haters, too.
Are they going to fight
That's even bigger. He got more haters than he do people that like him.
No, then that's when
movement gonna be there cheering him
right. That's when you know you're doing something right. Because at the end of the day, if nobody's hitting on you, then nobody gives a shit about who you are.
Thanks.
Raul, I got a quick question for you.
Yeah.
Separate and apart from the Jake Paul and everything, your boot camps, do we get access to that at some point?
I don't think so. I think I'm going to keep the boot camp separate.
Okay.
Yeah, especially for all the people that got the boot camp. Yeah, I don't think it would be fair of me to just, here you go, boot camp, when they already paid,
Gotcha.
Wait, is that for the people who didn't join the boot camp or for the people that...
What do you mean?
Like, I was in the last boot camp, so I think you told...
Oh, no, you'll get it. Yeah, that's for the people who didn't join the boot camp. Like, if you're already in the last boot camp, you'll have access to the new boot camp that I'm going to do in December. For somebody that doesn't have the boot camp, they'll have access to all the previous boot camps that I did.
What's the price?
So you could do one more boot camp for the year, is what you're saying?
To be honest, I think it'll probably even be my last. I don't want to put a 100% guarantee on it, but it may be like my last boot camp that I do. I'm not sure just yet. It may be the last live boot camp that I do at least. Because the way I structured the boot camp was basically like the first boot camp was going over everything. The second boot camp was going over just more advanced topics. Now this third boot camp, I'm going to be going over obviously price action, technical analysis, and everything, but I also want to go over how to level up in general. Like the majority of the days, like day 1, day 2, we're going to do 5 days is how I'm structuring it right now. Day 1, day 2 is mainly going to be like price action, risk management, all the normal stuff that we're going to go over, and many different like strategies behind them. So you can kind of formulate your own. Day 3, I'm going to do my best on journaling, but then like in between day 3 to day 4 and day 5, I'm going to be talking about leveling up, how to level up in your trading, entrepreneurship, and everything. So it's kind of like the way I envision that boot camp. It's like start trading, getting good at trading, and what to do when you're already making money. So the way I see it is like it's a whole different like curriculum than the day trading institution to begin with, if that makes any sense. I don't know if anyone in here joined the last boot camps or if Claudio can speak on that, but that's kind of like the way I've been trying to structure it. That makes sense.
Well, definitely, I would love to be a part of that. So I'll listen out for it.
Yeah, for sure. I mean, I'll keep everybody updated. I mean, you guys follow me on social media and stuff. I don't have
Thanks.
an exact date yet. I don't plan like the boot camp launches, dates, anything. That's my team. They tell me what to do, basically. Yeah, I'll keep you guys updated.
Yo, Raul, quick question. Magic keys. Does that work on? Can that work on the same chart as trade keep?
Yeah, but I mean, if you have trade keep, I don't think you need magic keys, to be honest.
That's a great
I already
question.
have it.
I was about to ask that too, with regarding magic keys and trade.
I just want the journal for the automated purposes because I'm using EdgeWonk right now, but I do my trade management and all that through Magic Keys.
Yeah, then that's fine. I mean, Magic Keys is like on it's on MT5. You know, it doesn't really. I wouldn't see. Yeah, no, you should be pretty good to go. Yeah,
But trade keep,
bro. Right now, trade keep is on phase 1, and I think phase 1 is fire. Like, there's so many new implementations that we're looking to actually make. Like, for example, for trade keep, what we're gonna do in the next phase, I'm not gonna like completely disclose every single thing, but things that are gonna come to trade keep is, so you know how you have your regular kind of profit kind. Hold on, so my internet's garbage, right? You can go on whatever position you want, click on it, and it'll pop up an interactive chart with trading view that'll show you where you got in and then where you got out, and then you can even replay the trade 110% live. So it'll be literally looking like you can actually see the entire trade play out on that specific day. You'll have a section where you can add all your notes for that specific day. And then the backtesting feature will literally kind of be like the trading view replay, except obviously you'd be able to actually enter positions on your backtesting to see how your trading is doing in the backtesting. Like, there's so much shit coming. I'm excited, bro. We've been working hard.
Does it show like your stop loss and your take profits that you set on a position?
Yeah, on the trade management. That's one portion there. Another thing that we're gonna add that for is for the trade facts section, which is kind of like the history page.
so pretty much if I go with trade keep, which I just purchased, I still would need magic keys, is what you.
No, bro, not at all. Like, give you an example. Like, so here, when you're actually trading and you keep this trade open, this is the home page. Right here, it'll show you all of your live positions. So if you enter like 3 trades on different pairs, right, it'll show you open position, close position, adjust stop loss, and break even, right? And you can actually click through. There'll be like a little menu where you could click through like GJ, gold, or US 30, and you can you can adjust everything right then and there. All you have to do to move all your stops to break even, and this is especially helpful if you're somebody that uses a shit ton of positions or trades with a shit ton of positions. If you trade with like 5 positions with a click of a button, you literally just press break even. It'll be right here. It'll move every stop loss to break even within literally seconds. Or if you want to adjust your stop loss on all your positions, you click another button, enter the price, and it'll adjust all the stop losses on all of your positions to the price that you give it. And then obviously close all will close all of the positions for the pair that you have selected. So it's very similar to Magic Keys, except you don't need a physical product.
So do you feel like it's as valuable for people who already have Magic Keys? Because that seems like a big feature for Trade Key.
I mean, it's definitely something that I haven't personally seen any other trading journal have. You guys can correct me if I'm wrong. But it's basically like a Magic Keys on Trade Keep. You know, if you don't bring your Magic, I think Magic Keys, you also need an expert advisor, right?
Yeah.
Yeah, Trade Keep, you don't need none of that. You literally just link your account. It'll show you all your history from your past data, and then it'll record all of your new data. Like, it's literally like link your account and you're ready to go.
Nice.
Like sound really good, automated.
Yeah. I mean, the first phase went well. We're now working on phase 2, which we're looking to implement the back testing. We're looking to implement the trading view integrated chart on your history, everything.
Oh yeah, Raul, how much is it a month? Trade Key.
Like $50, I think.
Oh,
$50.
That's pretty good.
Like that.
Yeah,
Some people wanted a yearly plan as well, so we're also going to do a yearly plan with a discount at the end.
Yeah, I'd rather do the yearly plan.
Yeah, that's going to come soon.
Well,
Thanks.
I got a quick question, Raul.
Yeah.
Let's say you're trading GJ or something as opposed to indices, and you're trading based off like intraday support and resistance. How does your entry time frame and the time frame in which you look for rejections differ than if you're trading based off like 4-hour or daily support and resistance?
Say it again.
So let's say you're trading GJ as opposed to indices, and you're trading based off like intraday support and resistance, like an hour time frame. How would your entry time frame and the time frame in which you look for rejections differ than if you're trading based off like 4-hour or daily support and resistance?
Well, 4-hour areas, I would typically go down to like a 1 hour, and then vice versa. On a 1 hour, I would go down to like a 5 minute. Even then,
In terms of entries or in terms of rejections?
Both. Like typically, like if I go down to a 5 minute, I'll look for the rejection in the entry on the same time frame.
Okay.
Bro, that was a good question because I was thinking the same thing. Because
Yeah.
I do a lot of 1 hour zones myself, like 1 hour support and resistance levels.
Yeah, you could be following the 15 or the 5.
Okay, because I like to go from zone to zone.
Yeah.
As far as like where I get in.
Yep. Yeah, I'm gonna